just can't quit you now 'cause I love you. Yes, I do. I can't let you go, baby. I can't let you go, baby. 'Cause I love you, I love you, I love you. No, no, no.
Hey everyone, I might as well just hop on a little bit earlier since Bitcoin's already going up here a little bit. Loki just kind of popped in between my legs here as well, so sorry about that. He's getting really needy all of a sudden. Hey, Crypto Chicken Wings. Hey, everybody. In a few seconds here, I'm going to pop up the TV so you guys can see what the Federal Reserve Chair Jerome Powell actually says here. What I'm looking at right now, it says it's imminent, so you guys can see it just for like a flash of a second until they just focus on Jerome Powell. I don't want to use any CNBC's footage, right? But you can see it. Where's this bad boy at? Right there. So right there, when they go live, we'll go live as well, and we'll all listen to what he has to say. But for now, it's on mute and kind of back in the background. Okay. Oh, Loki, what are you doing? Yeah. Loki wants more food, but not the dog food. He wants human food, but that's a no. Yeah. Okay, but we are seeing a small bounce. Hey, put your head down. Down. Go. Yeah, there you go. Yep. All right. Sorry, Loki's just being a brat. Right now, we haven't had too much of a major move. We had a move from last night when I told you guys I was buying. From there, I've made okay returns. They were leverage plays, of course. That's why I told you guys I was buying FTM. And the other thing I bought was the other thing that crashed, Crowcoin. I bought both of those. Both are doing fine at the moment. Depending on how we do with this Federal Reserve meeting, I may or may not close my positions later on. I'm waiting to see if we're going to have enough of a boost off of this meeting to break out of this trend line here. Let me go to the 1 hour chart. Actually, I guess we're using half a chart here, so let's go to like the 4 hour chart. We can break out of this small triangle and then try to tap on the 200 moving average here on the 4 hour chart. Somewhere around $41,500, guys. That's really what my goal is at this moment in time. But, I mean, give it one moment. I'm going to shut up, and then you guys are just going to hear Jerome Powell. But I thought you guys just, we've had a little bit of a bounce since we bought last night, or since I bought last night. We're doing okay. We're hitting that level of resistance pretty soon. We'll see if we're going to get knocked down once Jerome Powell talks, or if we go up, or if here's the dollar index on the right-hand side of your screen. If we're going to manage to continue to break out above this, we only broke out it for like a few seconds here. This is a monthly chart. Continue going higher, or if we might start this downward move here, which may give bulls an excuse to start buying more crypto because they feel like we don't need a capitulation before the next cycle may start, all right? But it's been a while since we've been back above this level. The last time we were above these levels was 2002. 2002. It's been a minute, guys. So if we do break out above this in some strong fashion here, it's not going to be really good for many people. All right, there we go. Or at least for us Bitcoin holders, I guess you would say, or crypto holders. Go back over here to the 5-minute chart on Bitcoin. And now it's just a simple waiting game, guys. Oh, you're seeing some movement here. Somebody was buying, somebody's shorting. Maybe we can actually go over here to CoinMarketCap because I think the entire market for the most part is up just a little bit. Yeah. A lot of unches, a lot of 1-2% moves here. 6% for Tron. Crow's up 3% with the 10x leverage. That's actually treating me pretty well. My FTM isn't doing as well, I don't think. What is FTM at here? Yeah, it's like well, no, that's not it. FTM over here. Where's FTM at? Yeah, it's up 4%. I don't know why the other one, but yeah, they're up a little bit here. Oh, now Bitcoin's going up. DXY is coming down, so that means that announcements here. We're just kind of waiting for the lag to come up on the screen. So, oh hey Jay, hey Booger and hey Tanya as well. Hope you guys are all doing fine. There we go. It says for decision imminent. Something's good is happening for Bitcoin. Something bad looks like it's happening with the dollar. So we'll see what the announcement actually is if he changed his mind or did something like that. Because a lot of this stuff has already been baked in, right? A lot of this stuff has already been baked in here. All right, here we go. Let's see if I can pull this up.
The Federal funds rate by 50 basis points to a new target range of 75 basis points to 1 percentage point. The Federal Reserve increasing says ongoing increases will be appropriate. The Fed will begin to reduce the balance sheet on June 1. It will ramp up the balance sheet reduction over time. It's going to begin with $47.5 billion in balance sheet reduction through August, and then after that 3-month period, it's going to reduce the balance sheet to allow the runoff of $95 billion a month as expected, and that'll happen beginning in September. That'll be a total of $60 billion in treasuries running off the balance sheet every month.
Okay, I'll put that off for now. I'll wait for them. I want to see Jerome Powell, not this guy, talk. But basically, everything is as expected. We're raising 50 basis points, and then the next time we should be between 0.75 and 1% basis points reached. And so that helps us out a lot here. It's just confirming everything we thought. You're seeing actually the moves that we just saw, they're kind of dying out pretty fast. Here's the minute chart during the Federal Reserve decision. It just went kind of choppy here. The minute chart as well in the dollar index, not much happening here. We might have to wait for Jerome Powell to actually start talking, which is the main reason I was getting excited for CNBC, but they put out that other guy, which is like, who's that guy? But I'll go back over here to the 5-minute charts for both of these. Nice quiet day though, excuse me. Everything's up just a little bit. You're kind of seeing some size of relief for some of the people that may have bought yesterday or some of the people that may have bought a few days ago. All right, so that'll be nice to see over the next few days, see if we can actually break out. But for Bitcoin, guys, maybe the daily chart will still be better for this one. Put up this old trend line as well. There you go. What we want to have happen later on today, once we get the new day candle, how long ago? That's like 6 hours from now. We're going to hope that we can hold these levels, maybe not break out above it, but hold these levels. And then tomorrow we could have a nice little bounce, and that's what people are going to be looking for, a short-term reversal at best here, but still an opportunity where if whales were to get involved, maybe that short-term reversal could be a reversal for like a week or so, if that makes sense. But until then, kind of this nice holding pattern. There's still an opportunity to buy if you guys wanted to, but a lot of the coins are up like, ADA is up 8%, Matic's up 3%, Doge is up 1%. STMX is at 5, InGen is at 5, FTM is at 4.5, Elon is up 3, or CB2, and Mana is at 4. There's still a few opportunities to buy some coins in here. The only other coin I bought yesterday was more for long-term holding. That's the Doge Elon coin, Dogelon Mars. Besides that, not much going on here. Let me see over here very fast. But the real goal for today is to use the momentum. Now we know what's going on. There's less uncertainty in the market. If Bitcoin can hold this level in the next 24 hours, we have an opportunity to pop back up above 40,000. Probably up to about maybe anywhere between 41,000 to 42,000. That'd be a good price target for you guys if you guys are buying now. I think, yeah. You guys are going to have different stop losses, though. For us that bought yesterday, we bought, you guys know my rule. Every time we have somewhat of a smaller, a medium to larger size drop in the market, when we break it back above the 20 moving average on the 15-minute chart, that's usually a good buy-in spot. It doesn't work all the time, but for you guys as reference in the future, this is usually a great spot to buy. You can see it went down afterwards, right? But hold on long enough, and it usually does give you some type of reward. There are times where it doesn't work, though, as well. Let me find a good drop like this. Well, this time it actually worked, but I don't know. Yeah, you can consider this a medium-sized drop. It popped up a little bit, but ultimately came back down a little bit more. Sometimes it works like that. That's not a drop I'm looking at. Here's one right here. This one worked out okay, but you can see it actually came back down before ultimately moving up. So sometimes you do see those moves. Right here, it didn't work out. Here, it did work out. So, if you guys want to take the opportunity, right here, it worked out a little bit. Not as much as you might want, but it did work out. Here, it worked out a little bit. Here it worked out a little bit, but not as much as you might want to, because most people probably would have been selling around here, and so forth. Find that point. You're usually going to be okay. It did not work right here, right? So it doesn't always work, but that's why you guys need to have stop losses in these markets. It helps you out so much more. But now that we're in kind of this choppy situation here, let's see if we have an opportunity to break out for the day. You see the dollar index coming down just a little bit. That's the dollar index right there. We'll see how far this comes down over the next few hours, maybe days. But right now, it's just consolidating here. And remember, I mean, we don't use technicals too much on the dollar index chart, of course, but we did close above the neckline here, symbolizing a double bottom play here, which usually means if we break out above that, we're going up pretty strong. But again, we'll have to wait to see if that actually happens. May is going to be a long month. We have 27 more days left. We may come back down a little bit more before popping up. It's really going to be a wait and see type of thing. And that's as well. Let me get off the dollar index here. Let me go back over the 5-minute chart. And let me go over here to, we can go to watch list. Look at the NASDAQ right here. Bitcoin's even doing a little bit better than the NASDAQ, and normally Bitcoin and the NASDAQ are like bros, right? Oh, wait, I guess maybe they're both coming down here a little bit. If the NASDAQ's coming down, waiting to see if this actually brings, it did bring it down. Yeah, so we're getting a little bit of a mixed bag. Not as much fun as I thought it was going to be, but again, we're waiting for Jerome Powell to speak, guys. The Dow Jones doing the same exact thing, a pop and a drop. SPY, same exact thing. Yowza. How's the volatility index doing? Yeah, of course it's doing pretty well right now. Oil's up about 4% today. That's nice to see. Anything else here that really piques my interest that you see? Oh, it's delayed. Huh. Okay, well, that's fine. Which one do you guys would rather see? Would you guys rather see the dollar index or the NASDAQ? Let me know. Here. I want to see in the last hour if anything's actually been popping off here. Uniswap's been doing fine. 0x is fine. Waves is doing a little bit better after a horrible, horrible last 30 days. ApeCoin still popping. What is ApeCoin right up to? I thought ApeCoin was pretty much dying off here. This is a 5-minute chart. Okay. ApeCoin managed to pop up last night for some monster gains. That's really nice to see. Yowza. Now it looks like it's curling back up to try to do some type of cup and handle, which might be nice. But man, somebody with ApeCoin really pumped the crap out of this just to have it drop on them. Feel bad for anybody that shorted up here and held on a little too long. Man, that's not too bad. Okay, but go back over to the NASDAQ for now. There we go. And it says the Federal Reserve is going to allow runoff from 60 billion treasuries, 35 billion in mortgages. So they're going to be selling a lot of stuff on the market here. And hey, Ed Crow. Yeah, Crow's doing fine here. We can check it out very fast. Why is this on Dogecoin? Crow's doing a little bit better than last night. My position's up just a little bit, but it's up 4%. I have 10x leverage positions on this and 10x leverage position on FTM. They're both doing fine right now. I guess this one's up 40% from yesterday when I bought it. And FTM's probably up only like 30-something%. So they're both fine. I don't know how much longer I'm going to hold on to them. But for now, they seem to be performing well enough for me to, continue holding them. So buy it around here. Moving up a little bit more. My stop loss is actually over here. Well, for Crow, my stop loss is actually 29.5. If you're like getting specific, like right here. But I'm hoping that it'll go up another leg and then I can kind of move the stop loss up a little bit more manually because there is no trailing stop losses on these exchanges. Yeah, but Crow's fine. It's just having a little bit of a reversal. If Bitcoin manages to pop off and break out over the next few hours here, here's one breakout that it had a little bit ago, right from there to there, right? The smaller breakout. That's probably what you guys saw earlier today. But if it can manage to break out above this larger one that's actually more important for us, go down to the 15-minute chart. That's going to be the one that would make Crow, FTM, or all of these altcoins. That'd be the one to give them the nice pop here. Now, this one is nice. Don't get me wrong. I enjoyed this little pop from Bitcoin. I told you guys I was buying anticipation of some type of move. But the reason I told you guys, 36 to 48 hours is how long I really want to hold this maximum is because of this potential move right here. and that's the one I'm more excited about. This one's fine, don't get me wrong. It's not going to be the big poof moment that we're all looking for, or we're all hoping for. And gosh, they're still not even. Jerome Powell still isn't talking here, but when he is talking, I'll let you guys know. And hey, teaser, I think the market is about to go down. The last few meetings, we have an initial reaction, then the opposite happens. What do you call it? Yeah, I could agree with you there. Right now, we're just kind of in this holding pattern. Hold on, we got like a 2 hours left until the market closes. Let me go over here very fast. Here's the NASDAQ. It's not even going down as much as we might think it is. I mean, again, this is a 5-minute chart. We just learned the information here. I think we're going to know more, teaser, specifically when Jerome Powell comes out and talks. So he'll give his little statement. But then afterwards, then you have all the questions. And a lot of reporters sometimes ask those really weird questions. Not weird questions, but they ask questions that initiate, that will cause the market to have a reaction, if that makes sense. Because that way it'll be news. Somebody asked him this question, and his answer dropped the market 200 points. Ooh, that's what they're going to try to do. And it'll be interesting to see if they're going to be able to get something out of him, or if we're just going to go like choppy sideways like this. Because after all that, we're still back in the same little choppy charts, if you will. Hey Ed, one is going to recover. I think you mean Harmony. Harmony's been hit pretty hard. Let me actually pop up Finviz here just in case I need it a little bit later. But Harmony has been hit pretty hard here, I think. Let me see if I go to back to numbers. Find one. My eyes don't look like looking at stuff like this, but here. Yeah, so year to date, Harmony is down about 70%. Last 7 days, it's down about 20%. The last 30 days, it's down about 50%. And in the last 24 hours, it's up 3%. This thing has been hit pretty hard. Be careful of it. My only fear about this one is if Bitcoin capitulates, this thing is going to be hit hard. And by that, I mean, what's the best way to do this? So normally during Bitcoin capitulations, let me get rid of all the stuff on the bottom. Let me put the volume back on here, and let me put the pointer on here instead of the crossbars. When Bitcoin capitulates normally after having a, here are the things that normally happens when Bitcoin capitulates. I know there's some little technicals here. They're going to look all wonky. Forgive me for that. When Bitcoin capitulates, normally we break down below the 20-month moving average. Like you see right here, breaking down below the 20-month, like we see right here, breaking down below the 20-month, and we see come right here, breaking down below the 20-month moving average. Oh, sorry, right there, breaking down below the 20-month moving average. And we usually have a rough time following the next few months from there. Okay, but in that time frame here, you know, Bitcoin had already lost a lot of value beforehand. So before we hit the 20-month moving average, Bitcoin was already 68% down from all-time highs. Okay. And then from there, once we actually broke down below it, it fell down a max of about another 59% from that point in time, okay? Back over here from all-time, well, not from all-time highs, but from a high, Bitcoin fell down about 84%, but from the time it dropped down below the 20-month moving average, it fell down about 50% from there. And the reason I tell you that is if you look at it like altcoins, for example, during that same period of time, breaking down below the 20-month moving average, Ethereum fell down about 81%, okay? But that's all the way to 2018, 2000, this isn't the Coinbase one, but this is fine. 2018, from the time it broke down below the 20-month moving average, Ethereum came down about 50%, okay? So if Ethereum can fall down 50% from the time it breaks down from the 20-month moving average, right? Imagine how much a lot of these altcoins are going to do. You may see a lot of altcoins like Harmony, and it's not just Harmony, you're going to see a lot of them. If Bitcoin does capitulate, you're going to see a lot of coins get hit in ways you can't even fathom, right? Well, you can fathom it if you were trading crypto in 2018 when I first started, or 2020. You can fathom it, but it'd be really hard to just really look at your, I don't know, Coinbase account, your BitGet account, your KuCoin, whatever, and see a position down, you know, within one day, 50% or so, or 20%, 30%, having these massive drops. I don't know if I still have the markings here from yesterday. If I squeeze this down and pull this up, you'll see these little arrows on the bottom of your screen. We used these during last night's stream. And what we were talking about is what capitulation looks like, right? Capitulation looks like this. Now, there are small capitulations and larger capitulations. The larger capitulations have the 20-month moving average being broken down below, breaking down below the 100 weekly moving average, and also having a death cross there on the charts from the 20-week moving average crossing down below the 50-week moving average. And no, still commercials for CNBC, nothing big happening here. But that big moment where you guys want to buy your altcoins and you guys want to buy everything, now that we're kind of getting down, it's not imminent, so to speak, a crash, but we're just kind of heading in that general direction. More and more, it seems like, especially with the recession around the corner. You'll see that within the few weeks of us actually breaking down below the 100 weekly moving average, this is a daily chart, but the 100 weekly moving average is here. From the time we broke down below this, it took about 31 days and a month. Bitcoin went down 45% during that time frame. I wonder if, Doge was something that was pretty common back in the day. Before it went parabolic, we had some other stuff going for it. So let's go back over here. March 2020, July 2020. Okay, here. So that same old time frame when Bitcoin was falling down, Doge fell down about 54%, okay? Probably a little more over here, but you get the gist. So we haven't even gotten to the point that far down where the 50% is even going to be approachable, right? So we're still somewhere like right around here. We're not anywhere close to this zone, okay? So don't be surprised if a Harmony or something like that, or whatever it may be, even Ethereum, even Litecoin, nothing is free from this, not even Bitcoin. If Bitcoin drops like 50% on some type of crash here, you're going to see a rough time ahead for it, okay? Let me go back over here, though. Not streams. Wait a second. Streams. I clicked on something accidentally, then when I'm interested in it, I can't find it. Okay, I have to look for that later on then. That was interesting. Okay. CNBC is back, but still nothing good coming in from them. But that's something you guys should understand as the main point. You guys should understand. Well, it's not going to be on this one. It is it? I have way too many Bitcoin charts here. All have different uses. Pull it back up here. We haven't had that moment of capitulation yet, and usually we need some type for a cycle. Now, we've had bigger capitulations and larger capitulations, right? So you actually see the one in 2018 was massive. The one in 2020 was massive. Big drops because we had those really bearish signs. The bearish signs were the weekly moving average's death cross, breaking down below the 20-month moving average, and also you can see right here, breaking down below the 100 weekly moving average. Drop right there. No death cross here, no capitulation, no long volume, so we didn't really do much there. Same thing happened here. Large volume candle off. If I can zoom in here. This one points to this point in time here. When we took a little bit of a break, it actually establishes the lows that we experienced last summer. Right here. This was a form of capitulation. Let me zoom in here. Right there is that point. But you can see, you can see it right there. Capitulation, but not really a major one because we didn't have all those extra signals. Same with the one right here. You guys may have felt like this was a massive capitulation. It was not. But a large volume candle didn't break down below the 100, didn't do anything crazy there. Now we're getting to that close point. Now we're getting to that zone where, hey, everything that bad has been happening, it's been pretty rough for us, honestly. Right, over the last few months, we've been kind of this nice uptrend, but ultimately this is a bearish flag. Let me pull up this picture from last night. Doesn't that look pretty much the same? Maybe something like that here. But you get it. It's a bearish flag, right? We're stuck in it. We're waiting to break down, but we may have one more pump before we break down, and that may be kind of fun to trade, but it's going to probably be a massive bull trap for a lot of new investors that don't know what they're doing. Excuse me. And Federal Reserve, he's still not talking. Jerome Powell is still not talking. Excuse me. Pop that up right here. And Bitcoin is coming down a little bit more after having that little bit of a pop and drop, if you will. But again, so far, nothing big's been happening. I think we're just pretty much waiting for Jerome Powell to speak at this moment in time. But again, if you want to buy a Harmony or anything like that, the best opportunity you're going to have is during the next capitulation moment for Bitcoin. And that means waiting for as long as it takes for us to have that long red candle bar of volume, right? Huge selling volume. And I mean massive amounts of selling volume. Because when you look at it and you kind of zoom in on it, you see how much bigger this one is than everything else before it? Everything else. Keep on going back. Still bigger, still bigger. Even this one here in 2020 was much larger than the one in 2018. Go back over here, way back in time. Well, I guess less people were... As we trade, more people are trading at these times. So there's more buyers, so sellers feel more confident about selling, if that makes sense. So over time, you see the volume go up a little bit more. But even from, 2021? That was a pretty big candle bar right there. Not as big as the one in 2020, but still pretty large. And now that we've kind of had this little section set up, we're waiting for the next big handlebar, or next big red line of volume, if you will. But you guys can see it's been a minute. We're due for one. Kind of go back historically. I don't know which one of this one. 288 days. 278 days. About 300 days. About 139 days. And so far, it's been about 349 days. We're due for one pretty soon here. But, it's just a waiting game for now, guys. Nothing's good on the news, though. That's kind of sucks. Hey, Elmer. Hey, Justin. Hope you guys are doing well. Hey, Jay. BKI Holy Moon Candle. Let me see if I can find it here for you. And what are we looking at right here? BKI. Is it stock or crypto? Black Knight. $69. Must have had earnings or open up here. I must have been halted for something. And it has some good news coming out if I go over here to BKI. Let's see. I thought it had something to do with earnings, it looks like. As home affordability goes to all-time low, shortfall of 2%, so there was no squeeze, just people buying it up. It got bought up by the director a bunch for $58 a few weeks ago. Not bad. Oh, no, this isn't. Is this not updating it? Wait, 62, 68. This is a 5-minute. Okay, this is a 15-minute delay. It hasn't realized it yet, and that's what's going on. Okay, that makes sense to me. But it's just getting halted again. So be careful with it. Is it halted again? Yeah, this is halted again. No, it's not. Oh, okay. It's going to get halted again. This is becoming a pump and dump thing. Did it get... Hold on a second. Oh, no. Trading halts. So it's not halted at this moment in time, but was it? Yeah, there it was. New York Stock Exchange. Reasons M. I think that means news. Oh, volatility hot. Never mind. Amex, Ost. Oh, I guess Ost is probably something going on too today. If you guys don't know what trading halts are, they pretty much hey boy, the exchange will halt trading to protect traders from maybe bad circumstances to be trading in the market, if you will. Things can get pretty heated over there. But AUST has a lot of halts today. What is AUST? We'll go back to this one in a second. Here's the minute chart. Oh, yeah. Oh, what the heck? Non-energy minerals? This is, 5-minute chart. The heck? Did an IPO today or something? It's not even on here yet. Yeah. But this thing was up at $28 and now it's at 5. I can see why this was having some volatility halts here. Well, that's kind of sad. Damn. not the type of IPO you're looking for, if you ask me. Here's back to the 5-minute. At least it's holding. It'd be kind of fun to watch the level 2 data of this, but man, that might crash your computer if you look at how much volume is probably going on right now. Well, I mean, that's probably a big pump though. To the 15 here. Yeah, we're doing a whole bunch of nothing, guys. Not as much fun as I thought. But the Powell News Conference is in 5 minutes, and that's what we're really looking forward to. That's what I'm more excited about. But I was hoping that they might do it a little bit earlier. Let me blow my nose very fast. All right. Hey Justin, can you transfer Clyde Tot from Robinhood to Voyager? I have no idea what that is. What is? Oh, crypto from Robinhood to Voyager. Yeah, if you got the wallet, you could transfer it over. You just want to make sure I haven't transferred using Robinhood because I don't have any money in Robinhood anymore. Oh, jeez, my little sugar scooper. Um, hold on a second here. You're catching me in a very relaxed day, guys. Before this, I was literally just trading a little bit and watching the Johnny Depp trial, which I think you guys can see behind me. Amber Heard's on the chair. Pretty. It's gonna be a lively day. I'm Team Johnny, of course, but that's just me. But you can transfer it over though. You just want to make sure that you have the right transfer method. You're probably going to be forced to use ERC20. That's kind of the standard for a lot of them, especially Voyager, I believe, as well. So double check that Robinhood has ERC20. You can do it that way. I think the fee is going to be somewhere about $25 or so. I think the gas fee to transfer on that chain. But yeah, you can transfer stuff right over there if you wanted to. I'd recommend moving it over to another exchange if you can. I'm not really a fan of Robinhood, but you know, it depends on why you'd be moving it over. If you want to move it over to Voyager because you want to start earning interest, then yeah, definitely. If you're just moving it over just because you feel like it's safe or something like that, sure. But you know, have a good reason for moving it over. I would say just because that fee can sometimes be annoying. It depends on how much money you have in there as well, though. But you can. Let's see. Crypto is holding us better than stocks. Yeah, right. Well, a lot of the Federal Reserve, the rates actually help and hurt stocks a lot more than they do crypto. Crypto's just been following the stock market, which has been pretty annoying for us over the last few months, of course, because nothing's happened. We were just in this bearish flag. See, hey teaser, Ost IPO. Actually, that explains it. That's a horrible. That is, yeah, that is not the way you want to see this thing kind of pop up today. That thing has been up and down all around. Let's see. And hey, Alex, the meeting had already happened. They're going to have a press conference about it in about a few minutes from now. Just a few minutes from now. Right now, CNBC is just showing me commercials after commercials after commercials about ETFs. So I don't really feel like putting that up on the screen here. But once they go live with him answering questions, I'm going to we're just going to watch it together and see how it affects the market here and any big moves that we may be watching for. Because right now, if I go to the hour chart, you guys will see it a little bit easier. A few of us bought yesterday at support, right? And now what we're doing is we're still holding our position, but we're waiting to see if we can break out above that. And we're hoping that Jerome Powell can kind of lead the way on that move for now. But no, it's just a waiting game here. But what, Dow is up 0.8%, S&P 500 is up 0.6%, and NASDAQ is up 0.2%. So the NASDAQ is usually what Bitcoin follows here, unfortunately. 5 rates. Okay, rates are fine. Everything's fine as far as the market's concerned today. I mean, again, from last night, Bitcoin's still up 3%, so I think we're doing fine at the moment. We're just really hoping that we can see some type of short-term boom here before ultimately we end up still continue with this downtrend. Man, I've got a stuffy nose today. Got to keep drinking a bunch of tea. Hey, Alex, as far as the meeting here today, they're raising 50 basis points, and then the next month they're going to raise it anywhere from 0.75 to 1%. So pretty much within expectations. That's the main thing to be watching at this moment in time. But nothing's crazy out of the ordinary. Nothing should be a surprise about what we saw today. So that's why you see the market really, if you look at it, over the last few hours, nothing has happened. Right? This is an hour chart. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Last 10 hours, nothing's happened. We're still trading within that same range. So at this moment in time, the Federal Reserve rate hike hasn't had too much of an impact. Well, it did have a small impact here. I don't know if it's still the case here. Is this the DXY? That was the NASDAQ. The US dollar index. Oh, no, that's going back up too. Even this is getting choppy at the same time. Let's go to an hour chart for this one so you kind of see it hour by hour. It's still pretty close to that resistance level here, and it shows the ability to pop, but right now we're still waiting for a Jerome Powell. It looks like this wants to go up higher. It looks like this wants to come down. I think even Teaser alluded to that a little bit about how normally we have a little bit of a small move, and then we end up going the opposite way as expected. Yeah. Usually the forex markets would be all over this. Maybe I can actually show you the forex market. Can I show you the USD versus the euro? Euro. Where's the euro at? E. There you go. Let me get the volume off of here. Oh wait, Jerome Powell speaking. Here we go. Just to make sure I don't get in any trouble. No sound?
Rate for the federal
My
funds
bad.
rate will be
He basically just said in that short time frame, I want to speak to America. We know there's hard times and so forth.
Reducing the size of our balance sheet. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. After expanding at a robust 5.5% pace last year, overall economic activity edged down in the first quarter. Underlying momentum remains strong, however, as the decline largely reflected swings in inventories and net exports, two volatile categories whose movements last quarter likely carry little signal for future growth. Indeed, household spending and business fixed investment continued to expand briskly. The labor market has continued to strengthen and is extremely tight. Over the first 3 months of the year, employment rose by nearly 1.7 million jobs. In March, the unemployment rate hit a post-pandemic and near 5-decade low of 3.6%. Improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics.
Sorry, when CNBC does that, I have to turn off the
Labor demand is
audio or the
very
video,
strong,
but you can hear
and
it.
while labor force participation has increased somewhat, labor supply remains subdued. Employers are having difficulties filling job openings, and wages are rising at the fastest pace in many years. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in March, total PCE prices rose 6.6%. Excluding the volatile food and energy categories, core PCE prices rose 5.2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. Disruptions to supply have been larger and longer lasting than anticipated, and price pressures have spread to a broader range of goods and services. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to further exacerbate supply chain disruptions as well. Russia's invasion of Ukraine is causing tremendous loss and hardship, and our thoughts and sympathies are with the people of Ukraine. Our job is to consider the implications for the U.S. economy, which remain highly uncertain. In addition to the effects on inflation, the invasion and related events are likely to restrain economic activity abroad and further disrupt supply chains, creating spillovers to the U.S. economy through trade and other channels. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to restoring price stability. Against the backdrop of the rapidly evolving economic environment, our policy has been adapting, and it will continue to do so. At today's meeting, the committee raised the target range for the federal funds rate by a half percentage point and stated that it anticipates that ongoing increases in the target range will be appropriate. We also decided to begin the process of reducing the size of our balance sheet, which will play an important role in firming the stance of monetary policy. We are on a path to move our policy rate expeditiously to more normal levels, assuming that economic and financial conditions evolve in line with expectations. There is a broad sense on the committee that additional 50 basis point increases should be on the table at the next couple of meetings. We'll make our decisions meeting by meeting as we learn from incoming data and the evolving outlook for the economy. And we will continue to communicate our thinking as clearly as possible. Our overarching focus is using our tools to bring inflation back down to our 2% goal. With regard to our balance sheet, we also issued our specific plans for reducing our securities holdings. Consistent with the principles we issued in January, we intend to significantly reduce the size of our balance sheet over time in a predictable manner by allowing the principal payments from our securities holdings to roll off the balance sheet, up to monthly cap amounts. For Treasury securities, the cap will be $30 billion per month for 3 months and will then increase to $60 billion per month. The decline in holdings of Treasury securities under this monthly cap will include Treasury coupon securities, and to the extent that coupon securities are less than the monthly cap, Treasury bills. For agency mortgage-backed securities, the cap will be $17.5 billion per month for 3 months and will then increase to $35 billion per month. At the current level of mortgage rates, the actual pace of agency MBS runoff would likely be less than this monthly cap amount. Our balance sheet decisions are guided by our maximum employment and price stability goals, and in that regard, we'll be prepared to adjust any of the details of our approach in light of economic and financial developments. Making appropriate monetary policy in this uncertain environment requires a recognition that the economy often evolves in unexpected ways. Inflation has obviously surprised to the upside over the past year, and further surprises could be in store. We therefore will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time. We are highly attentive to inflation risks. The committee is determined to take the measures necessary to restore price stability. The American economy is very strong and well-positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Okay, here's the big thing question. Sorry for playing with Loki, but he's bored.
Nick Chamarosa, The Wall Street Journal.
Have to buy him a little bit more, too.
Chair Powell, the unemployment rate at 3.6% in March is now essentially at the level that the committee had expected would prevail over the next 3 years, and at the bottom end of FOMC participants' projections for the longer run rate that you submitted in the projections at the last meeting. How has your outlook for further declines in the unemployment rate changed since March? What does this imply for your inflation forecast? And how has your level of confidence changed with regard to the feasibility of slowing hiring without pushing the economy into recession? Thanks.
Thank you. So you're right, 3.6% unemployment is just about as low as it's been in 50 years. And I would say that I expect, and committee members generally expect, that we'll get some additional participation. So people will be coming back into the labor force. We've seen that, particularly among prime age people. And that will, of course, tend to hold the unemployment rate up a little bit. I would also expect, though, that job creation will slow. Job creation has been at more than 500,000 per month in recent months, very, very strong, particularly for this stage of the economy. And so we think with fiscal policy less supportive, with monetary policy less supportive, we think that job creation will slow as well. So it is certainly possible that the unemployment would go down further. So I would expect those to be relatively limited because of the additional supply and also just the slowing in job creation. Implications for inflation, really the wages matter a fair amount for companies, particularly in the service sector. Wages are running high, the highest they've run in quite some time. And they are one good example of, or good illustration really, of how tight the labor market really is. The fact that wages are running at the highest level in many decades. And that's because of an imbalance between supply and demand in the labor market. So we think through our policies, through further healing in the labor market, higher rates, for example, of vacancy filling and things like that, and more people coming back in, we like to think that supply and demand will come back into balance, and that therefore wage inflation will moderate to still high levels of wage increases, but ones that are more consistent with 2% inflation. That's our expectation. Your third question was?
Your level of confidence that you can slow hiring without pushing the economy into a downturn.
So I guess I would say it this way. There's a path. There's a path by which we would be able to have demand moderate in the labor market and therefore have vacancies come down without unemployment going up, because vacancies are at such an extraordinarily high level. They're 1.9 vacancies for every unemployed person, 11.5 million vacancies, 6 million unemployed people. So, and we haven't been in that place on the vacancy, sort of the vacancy unemployed curve, the Beveridge curve. We haven't been at that sort of level of a ratio in the modern era. So in principle, it seems as though by moderating demand, we could see vacancies come down, and as a result, and they could come down fairly significantly, and I think put supply and demand at least closer together than they are, and that would give us a chance to have get inflation down, get wages down, and then get inflation down without having to slow the economy and have a recession and have unemployment rise materially. So there's a path to that. Now, I would say I think we have a good chance to have a soft or softish landing or outcome, if you will, and I'll give you a couple of reasons for that. One is households and businesses are in very strong financial shape. You're looking at excess savings on balance sheets, excess in the sense that they're substantially larger than the prior trend. Businesses are in good financial shape. The labor market is, as I mentioned, very, very strong. And so it doesn't seem to be anywhere close to a downturn. Therefore, the economy is strong and is well positioned to handle tighter monetary policy. So, but I'll say, I do expect that this will be very challenging. It's not going to be easy. And it may well depend, of course, on events that are not under our control. But our job is to use our tools to try to achieve that outcome, and that's what we're going to do.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You talked about using 50 basis point rate hikes or the possibility of them in coming meetings. Might there be something larger than 50? Is 75 or a percentage point possible? And perhaps you could walk us through your calibration. Why 1 month or one meeting should we expect at 50? Why something bigger? Why something smaller? What is the reasoning for the level of the amount of tightening? Thank you.
That's actually a really good question.
75 basis point in an increase is not something the committee is actively considering. What we are doing is we raised 50 basis points today, and we've said that, again, assuming that economic and financial conditions evolve in ways that are consistent with our expectations, there's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings. So we're going to make those decisions at the meetings, of course, and we'll be paying close attention to the incoming data and the
We're not having a soft landing, guys. I wish I could say we were, but we're not.
Finally, of course, we will be communicating to the public
Just my opinion.
about what our expectations will be as they evolve. So the test is really just, as I laid it out, economic and financial conditions evolving broadly in line with expectations. And, I think expectations are that we'll start to see inflation, flattening out and not necessarily declining yet, but we'll see more evidence. We've seen some evidence that core PCE inflation is perhaps either reaching a peak or flattening out. We'll want to know more than just some evidence. We'll want to really feel
He's
like
gone
we're
real
making
big.
some progress there. But I mean, we're going to make these decisions, and there'll be a lot more information. I just think we want to see that information as we get there. It's a very difficult environment to try to give forward guidance 60, 90 days in advance. There are just so many things that can happen in the economy and around the world. So, we're leaving ourselves room to look at the data and make a decision as we get there.
I'm sorry, but if inflation is lower 1 month and the unemployment rate higher, would that be something that we would calibrate towards a lower increase in the
We're
funds
seeing
rate?
a little bit of a
I don't
pop from
think a
Bitcoin
1
here, a
month-
little
1
bit of a
month is
pop,
not-
and you're seeing the
no,
drop from the US,
1 month's reading would not.
the dollar
doesn't tell us
index.
much. We'd want to see.
This is why we were
evidence
waiting for Jerome Powell to
that
talk.
Inflation is moving in a direction that gives us more comfort. As I said, we've got 2 months now where core inflation is a little lower.
Afraid of
We're
net-
looking
oh,
at that as
geez,
a
yeah.
reason to take some comfort. I think we need to really.
This is
see,
a good move for Bitcoin here, guys.
that
Let me actually
our
pull up the other
expectations
charts as
being
well.
fulfilled, that inflation, in fact, is under
There you go.
control and starting to come down.
You're starting to see a lot of coins pop off right now.
Again, it's not like we would stop. We would just go back to 25 basis point increases. It'll be a judgment call when these meetings arrive. But our expectation is, if we see what we expect to see, then we would have 50 basis point increases on the table at the next 2 meetings.
Thanks. Let's go to Colby.
Thank you. Colby Smith from the Financial Times.
Oh, babe, everything
Given
he's
the
saying is pretty much as
expectation
expected.
that
There's no
inflation,
bad
will remain
news.
well above the Fed's target at year end, what constitutes a neutral policy setting in terms of the Fed funds rate? And to what extent is it appropriate for policy to move beyond that level at some point this year?
So, neutral. When we talk about the neutral rate, we're really talking about the rate that neither pushes economic activity higher nor slows it down. So it's a concept, really. It's not something we can identify with any precision. So we estimate it within broad bands of uncertainty. And the current estimates on the committee are sort of 2 to 3%. And also, that's a longer run estimate. That's an estimate for an economy that's at full employment and 2% inflation. So really what we're doing is we're raising rates expeditiously.
Secret Fish just said something I can still hear in the head, so sorry. But 47 billion instead of 90 billion. I kind of wanted them to stick to the 90 billion, but I guess we'll take the good news here.
And financial conditions affect the economy. So we're going to be looking at the effect of our policy moves on financial conditions. Are they tightening appropriately? And then we're going to be looking at the effects on the economy. And we're going to be making a judgment about whether we've done enough to get us on a path to restore price stability. It's that. So if that path happens to evolve levels that are higher than estimates of neutral, then we will not hesitate to go to those levels. We won't. But again, there's a sort of false precision in the discussion that we as policymakers don't really feel. You're going to raise rates and you're going to be kind of inquiring how that is affecting the economy through financial conditions. And of course, if higher rates are required, then we won't hesitate to deliver them.
Neil.
Not a bad answer.
Thanks, Chair Powell. Neil Irwin with Axios. Do you see evidence that inflationary psychology is changing, that in areas like workers' wage demands, businesses' willingness to raise prices, do you see evidence that there is a psychological shift going on inflation? Thanks.
Easy.
We don't really see strong evidence of that yet, but that does not in any way make us comfortable. I think if you look at short-term inflation expectations, they're quite elevated. And you can look at that and say, well, that's because people expect inflation to come down. And in fact, inflation expectations come down fairly sharply. Longer-term inflation expectations have been reasonably stable, but have moved up but only to levels
You guys
where they
can see
were in
the volatility over the
2014
last few
by
minutes
some
here.
measures. So you can look at that, and I think that's a fair description of the picture. But it's really about the risks. We don't see a wage price spiral. We see that companies have the ability to raise prices, and they're doing that, but there have been price shocks. So I just think it takes you back to the basic point, was that we know we need to expeditiously move our policy rate up to ranges of more normal, neutral levels, and we need to look around and keep going if we don't see that financial conditions have tightened adequately, or that the economy is behaving in ways that suggest that we're not where we need to be. So you don't see those things yet, but I would say there's no basis for feeling comfortable about that. It's a risk that we simply can't run that risk. We can't allow a wage price spiral to happen.
Hey, thanks,
and we
Justin.
can't
I
allow
appreciate it,
inflation
man.
expectations to become unanchored. It's just something that we
No,
can't allow
it's
to
weird
happen,
for me
and
not
so
talking
we'll
and
look
just
at it that way.
listening.
Gina.
Great. Thanks, Chair Powell. Gina Smilik with the New York Times.
We're seeing a nice move by
You mentioned in the
Bitcoin.
statement both the upside risks to inflation from Russia and China. Obviously, those are very much supply shocks rather than demand side. And I wonder what you meant to convey by adding them. I wonder what you meant to convey by adding those.
Well, so we, our tools don't really work on supply shocks. Our tools work on demand. And to the extent we can't affect really oil prices or other commodity prices or food prices and things like that. So we can't affect those. But there's a job to do on demand. And that you can see that in the labor market where demand is substantially in excess of supply of workers. And you can see it in the product markets as well. But I guess I'm just pointing out that a couple of things. For both the situation in Ukraine
Hey,
and the
Kilo, on the left
situation
is the Bitcoin chart. On the
China,
right-hand side is the U.S.
they're
dollar
likely
index,
to
the
both
DXY.
add to headline inflation, and people are going to be suffering from that. You know, people almost suffer more from food and energy shocks than, but even though they don't actually tell us much about the future path. So, but the second thing is that they're both capable of preventing further progress in supply chain, in supply chains healing, and so, or even making supply chains temporarily worse. So they're going to weigh on the process of global supply chain healing, which is going to affect broader inflation too. So in a way, they're two further negative shocks that have hit really in the last, 60 days, 90 days.
Victoria.
Clean hands, I swear.
Hi, Victoria Guida from Politico. I want to follow up on that because you all have obviously highlighted that there are both supply and demand issues at play in inflation. And I'm just wondering, if these supply chain issues continue because of Russia, because of China, or just because these things take a while to work out, does getting back down to your 2% mandate require that these supply chain issues get resolved, since you can only handle the demand side, as you said, or will you have to crimp demand maybe even further if the supply chain issues don't resolve themselves in order to try and get inflation back down to where you want it to be?
So, I'll just say for now, we're focused on doing the job we need to do on demand, and there's plenty to be done there. Again, if you look at it, it's essentially almost 2 to 1 job vacancies to unemployed people. There's a lot of excess demand there. More than
We're going to hit our first level of resistance here on Bitcoin.
employed. plus
Jerome
job
Powell's giving
openings
us a
than
nice
there are
little
the size of
Jerome
the labor
boost.
force. So there's an imbalance there that we have to do our work on. It's a very difficult situation if you can't, you would look at core inflation, which wouldn't include the commodity price shocks, and that's one of the reasons we would tend to focus on that, because we can have more of an effect on that, but it would be a very difficult situation. I mean, we have to be sure that inflation expectations remain anchored, and that's part of our job too. So we'd be watching that carefully, and it puts any central bank in a very difficult situation.
Howard Schneider with Reuters, and thanks, and nice to be back. So 2 questions, one quick one. You cited the 1.9 to 1 figure so often now. I got to ask you, what would be a good figure there? What would you like to see that come down to think that you're at sort of a non-inflationary vacancy to unemployed rate? And secondly, on help from inflation, how much are you counting on wealth effects through
Thank you
stock
very, very
market
much,
channels?
Secret Fish. I
Equity
really,
markets
really do
broadly
appreciate
down
it. Thank
quite a
you
bit
very,
since
very
the
much.
fall first
And
of the
Secret,
year.
if
How
you
are
have any
mapping
questions,
that into
feel free to let
household
me know
consumption?
here
How
on
come down
Discord.
enough? Do you need another
go.
leg
Appreciate it,
down
my
in
man.
equity
I really,
values
really
to
do.
think
I can't
that
even
households are going
that
to
over
stop
there.
spending at the rate you need them to stop spending?
Okay, so in terms of the
legend.
vacancies,
Thank you very, very much, Secret Fish. I really do appreciate it.
We don't have a goal.
It's
in
going to
mind.
the YouTube fund slash.
There's no specific number that
Oh,
we're
yeah,
saying
just
we've
the
got to
YouTube
get to
fund, so
that.
thank you.
It's really, you've got to get to a place where the labor
Hey,
market
breakout.
appears to be more
Secret
in
Fish knew we were
balance.
breaking out. That's what
And
it was.
That depends not only on the level of those things, it depends on how well the matching function in the labor markets are working, because the longer
probably the best way to do this.
these expansions go on, you can get very efficient with all of that, and the beverage curve shifts out, and that also tends to to.
If you guys were here at the
help.
beginning of the stream, nothing
So
really
there
was
no
going on
specific
the
number.
last
I will say
hour.
we were at, I think
You do see
when
some
we got
things
to
starting to pop
1-to-1
off now
in the
across
late teens,
multiple
we thought that was a pretty
coins,
good
if you
number. But
will.
again, we're not
Altcoins.
shooting for any particular number. What we'd like to see
Ethereum
is
Classic's up
progress.
8%.
But we're not really looking at that.
FTM's up
That's
10%. That's my
an
big
intermediate
baby.
variable. We're looking
And then
at wages.
the
and
other
we're
one we
looking
talked
at
about
ultimately
yesterday for
inflation.
buying opportunity was
So there are a bunch of channels
Crow.
through
I don't
which
have Crow
policy
on here, though.
works. You can think of it as interest-sensitive spending, and then you can think of another big one as
Crow's only up
asset
6%.
values
But what's
broadly.
next leverage?
And there are big models with a lot of different channels that are related to that. We don't focus on any one market, the equity market or the
Hey
housing
Tony,
market.
Secret Fish
or
is Dono God.
we
Yes, he
focus
is.
on
Thank
financial
okay.
conditions
I always say it too much,
broadly.
but I really do
So we
appreciate Secret
wouldn't be
Fish very,
targeting
very much.
any one
That
market
donation was
and
like half the money
suggest
I made this whole month
going
because of
up
the
or
YouTube
down, or taking
striking
a
my
view on
channel
whether
saying
it's
I
at
was
a good
stealing
level or
other
a bad level.
charting
We just
people's
will be
stuff,
looking at very
which
broad
they
measures
apologize for,
of
but
financial
still.
conditions,
Thank you very
of
much,
all
Secret
the
Fish.
different financial conditions indexes, for example, which include equity, but they also include debt and many other.
Hey Megatony, the
things,
chart on the right
credit
is the
spreads,
dollar
things
index,
like
the
that.
DXY, if you want to check it out on TradingView. DXY.
Rachel.
Hi, Chair Powell. Rachel Siegel here from the Washington Post. To follow up from your message from the very beginning, what is your message to the American people about when they will start to feel the effects of, say, a 50 basis point rate hikes or multiple
I'd be
hikes?
careful of
How
buying
do you
in right
explain
now. A
to
lot
them
of
what that
times
does
after
to their grocery
they're
bill
done
or
talking,
their
things seem to
rent
level
or
out
their
just a
gas
little bit,
bill?
just so you guys know. So that's what normally
So,
happens. Doesn't mean it's going to happen now, but that's what normally happens.
The first
Okay.
thing to say is that we understand,
But
and some of us
Bitcoin
are
should
old
have
enough
a
to
pretty good
lived through
time later
high
on.
inflation, and many aren't.
I'm usually talking
But
about Forex, I guess,
It's very
but-
unpleasant. It's just something people don't, when they experience it for the first time. You're paying more for the same thing. If you're a normal economic person, then you're probably don't have that much extra, to spend, and it's immediately hitting your spending on groceries, on gasoline, on energy and things like that. So we understand the pain involved. So how do you get out of that? And it's our job to make sure that inflation of that unpleasant high nature doesn't get entrenched in the economy. That's what we're here for. One of the main things we're here for. Perhaps the most fundamental thing we're here for. And the way we do that is we try to get supply and demand back in sync with each other, out of imbalance.
Thank you again, Secret. And yeah, Tony,
So
chasing
that
can be
the
kind of
economy
bad. That's why I told you guys
under less
I was
stress
buying last
and
night at the
inflation will
support
go down.
levels.
Now, the process of getting there involves
There are still
higher rates.
opportunities, but
So higher mortgage
you
rates,
can't
higher
buckshot it
borrowing
now.
rates, and
You have
things
to
like that.
pick
So
the best ones you feel off of
it,
what's breaking out their own
it's not
technical.
going to
So
be pleasant either. But in
look at
the
each
end,
individual
everyone
coin
is better
and make
off.
your own
Everyone,
determination if you want to buy into it.
particularly people on fixed incomes and at the lower part of the income distribution are better off with stable prices. And so we need to do everything we can to restore stable prices. We'll do it as quickly and effectively as we can. We think we have a good chance to do it without significant increase in unemployment or really sharp slowdown. But ultimately, we think about the medium and longer term, and everyone will be better off if we can get this job done. The sooner, the better.
Thank you, Edward.
Thank you, Chair Powell. Edward Lawrence with the Fox Business Network. So you've talked in the past about consumer spending and how that's drives the economy. Are you concerned with this high level of inflation that the consumer will stop spending, pushing us into, and what's the level of your concern, pushing us into a recession?
So the economy is doing fairly well. We expect growth to be solid this year, and we see household spending and business investment as fairly strong, even in the first quarter, which was relatively slow on some other fronts. So, and the labor market. If you look at the labor market, for people who are out of work and looking, there are lots of job opportunities. For wages are moving up at rates that haven't been seen in quite a long time. So it's a good time to be a worker looking to either change jobs or get a wage increase in your current job. So it's a strong economy, and nothing about it suggests that it's close to or vulnerable to a recession. Now, of course, given events around the world and fading fiscal policy effects and higher rates, you could see some slower economic activity. Certainly, it will not be. Last year was an extraordinarily strong growth year as we recovered from the pandemic. As I mentioned, growth over 5%. But Most forecasters have growth this year at a solid pace, above 2%.
But we've talked with economists who have advised Democrats and Republican presidents who both said that that the Fed is so far behind the curve on inflation that a recession is inevitable.
So, and as I said, I think we have a good chance to restore price stability without a recession, without a severe downturn, and without materially higher unemployment. And I mentioned the reasons for that. So I see a strong economy now. I see a very strong labor market, for example. Businesses can't find the people to hire. They can't find them. So typically in a recession, you would have unemployment. Now you have surplus demand. So there should be room, in principle, to reduce that surplus demand without putting people out of work. The issue will come that we don't have precision surgical tools. We have essentially interest rates, the balance sheet, and forward guidance, and they're famously blunt tools. They're not capable of surgical precision. So
yeah, and if you guys can, please make sure to hit the like button. Thanks, Secret Fish. I always forget about that. Please make sure to hit the like button. And you guys can spam chat as much as you want. I think that helps out with engagements as far as YouTube's concerned. So any engagement you guys can do, like, chat, it does help out the channel a lot. I really do appreciate it, guys.
It is to try to achieve it. So that's what we're doing. There are a range of opinions, though, and that's only appropriate.
Steve Dorsey.
Hi. Thanks, Steve Dorsey, CBS. You mentioned earlier, just now, fading fiscal policy. Do you feel that the Fed has been supported enough from policies at the White House and in Congress in combating inflation?
It's really the Fed that has responsibility for price stability, and we take whatever arrives at the Fed in terms of fiscal activity. We take it as a given, and we don't evaluate it. We don't. It's not our job, really. We don't have an oversight function there, and we look at it as our job given all the factors that are happening, to try to sustain maximum employment and price stability. So, if the Congress or the administration has ways to help with inflation, I would encourage that. But I'm not going to get into making recommendations or anything like that. It's really not our role. We need to stay in our lane and do our job. When we get inflation back under control, then maybe I can, give other people advice. Right now, we need to focus on doing our job, and I'll stick to that. Stick in our lane.
Steve Matthews.
Steve Matthews with Bloomberg News. A number of your colleagues have said that rates will need to go above neutral into a restrictive territory to bring down inflation. One, do you agree with that? And two, you recently spoke in great praise of Paul Volcker, who had the courage to bring inflation down with recessions in the 1980s. And while it's certainly not your desire, and the soft landing is the big hope of everyone, would this FOMC have the courage to endure recessions to bring inflation?
Yeah, guys, you can spam whatever you want to. I'm running a test right now to see how engagements work with YouTube. So spam letters, where you're from, it doesn't matter. You guys can just spam whatever you guys want to. If it's something is hidden, I will hide it. I didn't realize that yet. There you go. Because I know Tony likes that
thing.
We
can't know that today. That decision's not in front of us today. If we do conclude that we need to do that, then we won't hesitate to do it. I'll say again, there's no bright line, that you're stepping over. You're really looking at what our policy stance is and what the market is forecasting for it. You're looking at financial conditions and how that's affecting the economy and making a judgment. We won't be arguing about whose model of the neutral rate is better than the other one. It's much more about a practical application of our policy tools. And we're absolutely prepared to do that. Wouldn't hesitate if that's what is taken. So I am, of course, who isn't an admirer of Paul Volcker? I shouldn't be singled out in this respect, but I knew him just a little bit and have tremendous admiration for him. But I would phrase it this way. He had the courage to do what he thought was the right thing. That's what it was. It wasn't a particular thing. It was that he always did what he thought was the right thing. If you read his last autobiography, that really comes through. So that's the test. It isn't will we do one particular thing. I would say we see restoring price stability as absolutely essential for the country in coming years. Without price stability, the economy doesn't work for anybody, really. And So it's really essential, particularly for the labor market. If you think about it, if you look at the last cycle, we had a very, very longest expansion cycle in our recorded history. And in the last 2-3 years, you had the benefits of this tight labor market going to people in the lower quartiles, and it was, racial wealth and income, not wealth, but income gaps were coming down, wage gaps. So it's a really great thing. We'd all love to get back to that place, but to get back to anything like that place, you need price stability. So we've been hit by historically large inflationary shocks since the pandemic. This isn't anything like regular business. We have a pandemic. We have the highest unemployment, since the Depression. Then we have this outsized response from fiscal policy and monetary policy. Then we have inflation. Then we have a war in Ukraine, which is cutting the commodity, patch in half. And now we have these shutdowns in China. So it's been a series of inflationary shocks that are really different from anything people have seen in 40 years. So we have to look through that and look at the economy that's coming out the other side. And we need to somehow find price stability out of this. And it's obviously going to be very challenging, I think, because you do have, numerous supply shocks, which are famously difficult to deal with. So I guess that's how I think about it.
Hey, Chris Rugaber.
Thank you. Chris Rugaber and Associated Press. Earlier, you just said that if necessary, I think were the words, that you would, or if it turned out to be necessary, or you said it's possible that we'll need to move policy to restrictive levels, given where inflation is.
Looks like Bitcoin wants to go up a little bit more here.
Or certainly the hot labor market, as you described it. Why still the hesitation?
And FTM is up 11%.
What else do you need to see in order to
Crow's
determine
up 7.
that? Wouldn't the Fed
Mana's up
naturally
9.
be looking to go to a restrictive
Ethereum
level?
Classic up 9.
Thank you.
88 up 13.
So I didn't.
Matic up 7. Doge up 4.
We're
Ethereum
not
up
going to
6.
be erecting a high
Bitcoin up
barrier
5.
for this. It's more if we think it's appropriate. The point is we're a very long way from neutral now. We're moving there expeditiously, and we'll continue to do so.
And there's the pop.
We can't make that decision really today.
I think
the
Secret just
decision
went long.
about how high to go will be on the table to be made when we reach neutral. And, I expect we'll get there expeditiously, as I've mentioned. So it's not that we don't want to making that decision today wouldn't really mean anything. But I'll say again, if we do believe that it's appropriate to go.
Sorry, it's just the bootleg website I'm using is
to those
loading.
Levels, we won't hesitate.
Probably a lot of people are looking at this right now. And thanks for the spam messages, guys. I do appreciate it a lot. Wowzers.
Mike McKee from Bloomberg Television and Radio. The balance sheet, why
Oh, stop pausing.
did you decide to wait until June 1st to begin letting securities roll off and not start immediately
I'm
start
actually
in
interested
the
in this
middle of
answer.
this month, say? And do you have a newer or a better estimate for the monetary policy impact of letting the balance sheet decline? And then finally, I'm just curious why you felt the need to address the American people at the top of your remarks. Are you concerned about Fed credibility with the American people?
Yeah,
So
he
why
is,
June
but he
1? It
can't
was
say
just
it.
pick a date, and that happened to be the date that we picked. It was nothing magic about it. It's not going to have any macroeconomic significance over time. We just picked that. Sometimes we publish these calendars on the first day of the month, and that's what we're doing. I wouldn't read anything into it. In terms of the effect, I would just stress how uncertain.
Oh, I'm just going to refresh it. So far, he's doing really good, though.
Significance over time. We just picked that. Sometimes we publish these calendars on the first day of the month, and that's what we're doing. I wouldn't read anything into it. In terms of the effect, I would just stress how uncertain the effect is of shrinking the balance sheet. We run these models, and everyone does in this field, and make estimates of what will be the how do you measure, a certain quantum of balance sheet shrinkage compared to quantitative easing. And, these are very uncertain. I really can't be any clearer. There won't be any clearer. People estimate that that broadly on the path we're on, and this will be taken probably too seriously, but sort of 1/4%, one rate increase over the course of a year at this pace. But I would just say with very wide uncertainty bands, very wide. We don't really know. There are other estimates that are much smaller than that, by the way, and some of you may have read about that. That's kind of a mainstream estimate. We know that it is part of returning to more normal, more neutral financial conditions. And our strategy is to set up a plan and have it operate, and really have the interest rate be the active tool of monetary policy. In terms of speaking to the American people, I feel like sometimes I want to remind us really that that's who we work for, and that it's inflation that people are feeling all over the country, and it's very important that they know that we know how painful it is, and that we are working hard on fixing it. I thought it was quite important to do that, and so that was really the thinking behind that.
Do you think the Fed has a credibility problem?
No, I don't. And a good example of why would be that, so in the fourth quarter of last year, as we started talking about tapering sooner and then raising rates this year, you saw financial markets reacting, very appropriately. Not to bless any particular day's measure, but the way financial markets, the forward rate curve has tightened in response to our guidance and our actions, really amplifies our policy. I mean, it's monetary policy is working through expectations now to a very large extent. We've only done 2 rate increases, but if you look at financial conditions, the 2-year is at 280 now. In September, I think it was at 20 basis points, and that's all through the economy. People are feeling those higher rates already. And so that shows that the markets think that our forward guidance is credible, and I think that's we want to keep it that way.
I think they have a credibility problem, but not as bad as you might see on the news.
Brian, Chung.
Mostly from just being late to all of this, the transitory mistake.
Hi there, Brian Chung with Yahoo Finance. To expand on Steve's question about Paul Volcker, there was also a great pain that came with that as well. Higher interest rates obviously affecting households and businesses, and wondering how you kind
Refresh again. Looks like a lot of people are actually watching the same server.
Finance. To expand on Steve's question about Paul Volcker, there was also a great pain that came with that as well. Higher interest rates obviously affecting households and businesses, and wondering how you kind of square what might be demand destruction. Are you already seeing that? Is the idea here to incentivize a lack of spending, to decrease consumption, to perhaps table business investments? Is that essentially what's happening through this hiking cycle? Thanks.
Well, so as I mentioned, you can see places where their demand is substantially in excess of supply, and what you're seeing as a result of that is prices going up and at unsustainable levels that are not consistent with 2% inflation. And so what our tools do is that as we raise interest rates, demand moderates and it moves down. Interest rates, businesses will invest a little bit less, consumers will spend a little bit less. That's how it works. But ultimately, getting supply and demand back in balance is what gives us 2% inflation, which is what gives the economy a footing where people can lead successful economic lives and not worry about inflation. I mean, so yes, there may be some pain associated with getting back to that, but the big pain is in not dealing over time, is in not dealing with inflation and allowing it to become entrenched.
Greg, Rob.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could take a step back and talk about, in March, the dot plot had, looked like steady quarter-point rate hikes, get the funds rate up to 2% at the end of the year. Now, it seems like you're much more aggressive. So could you talk about the thinking that's behind that? Thank you.
So look, I think what you've seen is really, I would say, last fall, in the middle of last fall, there was a time when our policy stance was still pretty much in sync with what the data were saying. If you remember, there were a couple of weak jobs reports, and inflation had actually come, month by month inflation had come down till September, a few months in a row, stayed low. And then around the end of October, we got three or four really strong readings that just said, no, this is a much stronger economy. And by the way, then with the restatement of the
Thanks,
jobs
Justin.
numbers, it looked like the job market was much more even and stronger in the second half of the year, but that hadn't happened yet. Anyway, we got an ECI reading, Employment Compensation Index reading, the Friday before the November meeting. Then we got a really strong jobs report. Then we got a really high CPI report. And so I think it became clear to the committee that we needed to adjust and adapt. And we have. Ever since then, really ever since then, we've been adapting. The committee moved by the time of the December meeting to a meeting of 3 rate increases, then to a meeting of 7 rate increases at the March meeting. And that process is going on. And it's clearly continuing. And that's why I say, and I actually mentioned this at the March meeting, that no one should look at any single SEP as sort of a real resting place for 90 days, because we're in a fast evolving situation, and that's what's happened. You can see unanimous vote today, of course, and I told you the guidance that broad support on the committee to have 50 basis point hikes on the table at the next couple of meetings. So you're right, and by the way, other forecasters have been doing the same thing. And it's just us adapting to the data and to the situation and using our tools to deal with it.
Thanks. We'll go to Nancy for the last question.
Last question, everybody.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, I want to ask how you're able to balance your dual mandate, stable prices and maximum employment, especially when the unemployment rate for black workers is still roughly twice the rate for white workers.
Oh, snap. So racial questions.
Unemployment rates for all racial groups have come down a lot and are now much closer to where they were before the pandemic hit. So that's
spy
one thing I would
calls?
say, and that's important. But the bigger point is this: I do not at this time see the two sides of the mandate as in tension. I don't, because you can see that the labor market is out of balance. You can see that there's a labor shortage. There aren't enough people to fill these job openings, and companies can't hire, and wages are moving up at levels that would not over time be consistent with 2% inflation over time. And of course, everyone loves to see wages go up, and it's a great thing, but you want them to go up at a sustainable level.
Oh, I wasn't
because these
saying
wages
no to
some
whatever
extent
Jerome Powell was
being
just
eaten up
saying
by
about
inflation.
the question.
So
Loki's
what
trying
that
to
really
bite his
means
bed open
is,
and tear it apart.
to
I'm
get
like,
the
no,
kind
don't
of
do it.
labor market we really want to get, we really want to have a labor market that serves all Americans, especially the people in the lower income part of the distribution.
And don't worry,
Especially
Teaser, there'll be other
to do that, you've
opportunities
gotta
to
have
buy
price
back in.
stability. And we've got to get back to price stability so that we can have a labor market where people's wages aren't being eaten up by inflation, and where we can have a long expansion too. That's the good thing, is you can have, as we've had several of the longest expansions in U.S. history have been in the last 40 years, and that's because it's been a time of low inflation. And long expansions are good for people and good for the labor market. So that's the way I think about it. I think we, our tools work. We have to think in the medium and longer term, and I do think that the best thing for everyone is for us to get back to price stability to support really a sustained period of strong labor market conditions.
I'm just going to move this off of the daily
Thanks
chart
very
to the hourly chart, see if it makes a difference here. Being more precise.
Fed Chair Jay Powell, first in-person news conference from the Fed in 2 years. First
Yeah, that looks a bit mild, but nicer.
rate hike that we have seen since back in
Okay.
2000. Also announced.
Get her off of there. Okay. There you go. Yeah, when you put it down here a little bit more precise, you can see we actually did just start a breakout here. If you guys did want to buy in, now would be still an okay opportunity here. You just got to be careful, and you guys have to put some stop limits here. Am I buying here? No, not really, not at all. I'm still kind of wary of this kind of week in general, just because of how choppy the market is. But if you guys wanted to take a buying opportunity, like, we did just break out here. Not a major breakout, but still a breakout nonetheless, okay? Now, kind of going over what we just talked about over the last few minutes here, guys. That's what it looks like. That's what we kind of bought last night, I guess around 5 o'clock, 6 o'clock Pacific time. 6 o'clock, excuse me. Well, 5 o'clock for me, yeah. But what do you call it? We're seeing a nice little move here. That first breakout did occur. That's nice to see. We don't actually need this anymore. We're still trading in this channel. We're going to hope that we can continue to move up higher bit by bit. But that main thing that we're trying to break out above right now and close above, which means we have another 4.5 hours of holding above these levels, guys. We need to close above the 20-day moving average if we're going to use this as another big boom coming into tomorrow, okay? That's really the big thing that everybody's kind of waiting for. So my 10x long positions on FTM that I bought yesterday, FTM is up 11% right now, like 11.5. What's the other one I bought? Crowcoin. Crowcoin's not nearly as high. Crowcoin is only up about 7% at the moment. Depending on how we look over the next few hours, I'll probably shave off some of those long positions, or maybe sell them all, depending on what I see kind of going there. Maybe I might sell my FTM, but maybe Crow has a little bit further up it can go, so maybe I'll just hold on to that a little bit more, right? But those positions have worked out really well for me. I'm not going to really be buying in much else besides that until I see another setup that I really like. Right now, I don't usually like to buy off of support levels these days, just because we usually break those support levels. But yesterday I felt like, 5 weeks in a row. A lot of times you guys will hear me say stuff like, hey, we've never had 6 red weekly candles in a row, right? And there's not really a technical thing behind that. It's just more of like, hey, I mean, there's probably is something technically, but it's just really in the data, if you will. But I think now with that move that we saw today, look at that. That green candle, that red candle turned into a green candle, just like that, right? And so that's kind of how sometimes it can work out. As far as our resistance on this possible move here, it seems like that 20-week moving average is still going to be a hindrance for us, so just be aware of that at this moment in time. And on top of that, I think the 50 is still somewhere up here. Where's the 50 at? Did I delete the 50? I have no 50 here. What happened to it? That is interesting. Okay. Don't know why it's not there, but I can add it there just in a quick second. Chart, 50, style, baby blue, thick line. There we go. And the 50-day moving average right there. So I think that 50 may be our short-term resistance somewhere up here, about $42,000 or so. I'll see if we have another good day on Bitcoin as well. But remember how this is one of those times when we break above the 20-day moving average, we tend to have these longer candles, at least over the past few months, right? Breaking above, breaking above, breaking above. But then at the same time, whenever we end up breaking back down, whoosh, downward move, boom, like that. So you got to keep a close eye on all of this. But, the opportunity is there if you guys want to take it. I'll probably slowly start to scale out of this stuff. Probably closer to FTM first, and then maybe I'll scroll out of Crow a little bit later. Crow just popped up to 7% up right now, so that one's doing pretty fine as well. And so that means I think we got 10% leverage here. 10x leverage, excuse me. What's that, like 110% for FTM? Crow is at 70% right now. I can live with making 70% in less than 24 hours, right? But it's just depending on do I want to be a little bit more greedy and do I want to be a little bit more greedy for a little bit opportunity for more money or not? I'm going to be a little bit more greedy, I think, here and kind of shave off a bit at a time and not just sell everything. But the fact that Powell is ruling out a 0.75 75 basis points hike, that's good news for us. The fact that, we already know he's trying to not cause a recession, but he's slowing things down just a tad. He's not going to be selling off as many assets as we predicted, so that's good news for everybody. You're seeing a nice little boom here for Bitcoin. If he was more aggressive, we would have actually had a flat-out crash here, and that might have started something really nasty. But for now, we're in a decent spot, guys. Nothing crazy going on, nothing bad going on. We got this kind of good news out here. We'll see how long this good news lasts. But since we've now broken out above the 20-day moving average, our main goal for the next 4 hours and 34 minutes and 32 seconds is to hold this level, is to hold above this level. And then tomorrow, leading into Thursday, leading into Friday, we're going to have an opportunity to break back out above the 50-day moving average or so. That's why I was giving you guys these little bits of resistance here over the last few days, just so you guys could see what's going on. But again, we still have 4.5 hours. we need to close above this 20-day moving average, and hopefully, if we can, close above this trend line here. Otherwise, we may actually just get rejected hard, right? So that's why I told you guys, be careful of buying in here, because sometimes after he's done talking, things seem to level out just a little bit. My history with that is not so much in the crypto markets when he's talking, but more in the Forex markets where I used to trade a lot. But if we go back over here to the 5-minute chart, you'll see that we're still holding it. Still holding it. So there is an opportunity for those of you guys who want to buy into crypto at this moment in time and probably have some smaller gains. The opportunity is there. But have a plan before you buy, and that if it takes too long to make the plan and you don't get a trade, so be it. Don't try to force a trade here. And then on top of that, going forward, maybe you guys just want to use a stop loss. If you're buying Bitcoin, a stop loss of, well, I don't know what this might be here. If you were to buy it now, somewhere of about 0.65%, not even 1%. You can do, you could actually, I'd maybe do 1%, right? Or if you're doing leverage, maybe just 0.5% or so. But it should give you the opportunity where if we do hold this, you're taking the opportunity for larger gains up here, and you're just risking a small amount of money on the downside here, which will help you out quite a bit. Okay. But again, let's just take a quick peek here, 5 minutes. Let's see what Ethereum did. Ethereum had a nice little pop above its resistance. Dogecoin had a nice little pop. Matic had a nice little pop above its resistance. ADA at its resistance, and then it popped above it, but it tapped on it, so it's at resistance. XRP, I don't know if there's any resistance up here, but it did have a nice little move. Luna still doing fine. Shiba up 6%, broke above a Fibonacci level. That's pretty nice to see here. EOS, go to the 50-minute charts here. Anything special with EOS? It just broke above an old level of resistance for us, kind of right here, if you will. Nice little move there. Ethereum Classic broke above its level of resistance here, which was an old level of support actually here. But it looks like it ran smack dab into it. Is this a Fibonacci level? Yeah, it ran straight into a Fibonacci level. Also, it might have run into its own 100-day moving average. No, not there just quite yet, but it's running into it at this moment in time. DOT, nice little move above its resistance here. You saw how they all kind of stopped there just for a second, then boom, they kind of blasted through. STMX is up 9%. Look at that. STMX, I love these little pops it has. I don't know why. I don't know. No, I'm not going to sell my STMX. STMX is something I'm holding for the long term, and I just want to accumulate more. Yeah, it ran up like 15%. Came back down a little bit. Now it's running back up again. That's nice to see. Engine's up. FTM is up. We bought FTM here a couple days ago, or yesterday, excuse me, off that little dip as it touched support, and it's been doing okay ever since. Anything else? ICP up a little bit more as well. Link up, broke out above support resistance. Litecoin up a little bit after touching the Fibonacci's, or actually that's just a support level. Let's see. Yeah, thank you. And then we have Mana up here at 10%. Mana is actually doing pretty well too. Look at this. Looks like it had some good little bumps going in here too today. 4-hour chart. We are running into some resistance levels here, aren't we? The 50 on the 4-hour chart. Ethereum on the 4-hour chart running anything? Not for a while here. I mean, okay, that's pretty close actually, if you think about it. That's less than $100 away. About a little over, like $125 away is our resistance levels for a lot of these different coins here. Doge resistance is up here at the 100 weekly moving average, the 50 or the 50 on the 4-hour, excuse me, and then the 200. Matic at resistance here, trying to break out above it. ADA at resistance as well. XRP, nothing really there. Broke above the 50 though. That's nice to see. Luna. So if you're looking for something to trade, I know everything's kind of in a little bit of a move right now. Try to find something like Engine Coin that's like at a level of resistance, because if it can manage to break above that moving average, you should see a good move here. But check back in the past. Like you can see actually when you break above Engine Coin, sometimes it really doesn't have that strong of a move. That wasn't strong. That wasn't strong. That wasn't strong. So actually, look at each coin independently and you do that technical analysis for yourself. FTM, same thing. Mostly because it's Bitcoin that we're looking at on the day-to-day basis here. But excuse me, FTM's at FTM's at is 50 moving average here on the 4-hour chart. That's probably why it's on a big move. It's a 4-hour chart. But if it can bust above that, we might see another move here pretty soon from all these different coins here. ICP, again, breaking above its 50 on the 4-hour chart. Link here doing the same thing. Litecoin did all that already. Mana at the 50 on the 4-hour. Elon at the 50 on the 4-hour. Sol at the 50 at the 4-hour. XLM actually broke above it. Nice move right there. What moving average is this right here? This is the 200 weekly moving average. Oh, that's that resistance right there. That's exactly where it stopped. Gala's up 10% at resistance. ApeCoin is doing fine at the moment. I mean, ApeCoin had a nice little rally back up here. This is a 4-hour chart, and it just kind of died back down. I think this is trying to gear up to go up again. I don't know if it's going to reach all-time highs, but I think it might be able to get back up here to like $20 or so, somewhere around there, unless Bitcoin takes a dip. And of course, we got Crow, which we bought yesterday as well. Crow is actually above the 20, and it's not even close to the 50 here. But remember, when I usually buy, it's because Bitcoin did something specifically. And here, you buy it when it breaks out above the 20 moving average on the 50-minute chart. It usually leads to good returns, right? I'll make a video about that. I think it's something you guys should know. My videos really don't get many views because I'm not that entertaining. But the educational aspect of it, if you apply it to your own trading styles, I think it can help you. And even though the method of buying a particular coin after a major drop, after it breaks above the 20 moving average on the 50-minute chart, it works here after it closed above it. I mean, sure, but sometimes it doesn't always work. I mean, it worked there, I guess, a little bit. It worked there, but okay, it doesn't always work, and that's my main point. Like here, it worked a little bit, but not as much. So sometimes it doesn't work as beautifully, like where it has that full reversal. So I want you guys to understand that. And if you're doing the same type of move with altcoins, like here it happened as well, kind of good move. Here it didn't work right there. Let me zoom in here. I guess this was a bit small enough drop right there. That didn't work out. Okay, so it's not perfect, but you can see more times than not, it will lead to some decent profits, especially when we're in these kind of bearish markets. And I know a lot of you guys don't really like to short crypto, and that's fine. I recommend you guys start to learn how to short, especially before we have capitulations at the time here. But I think that little method, that little tidbit of knowledge is something that most people don't talk about, and I think it can help you guys out a lot. And you guys could always just have a simple stop loss here, right, to kind of protect yourself. That stop loss could be anywhere from 1 to 5%. Even with leverage, it could be 1 to 5%, and it'll go a long way to helping you guys out with managing your risk and trying to buying the dip, so to speak. Because buying, like knowing exactly where this is going to be, it can be hard. Because sometimes there's a Fibonacci level there, there's something there to support, but sometimes we just break down below it, and sometimes you just kind of a little more worried, like, oh my god, our short's going to attack it again. You don't want to buy it at the height of that emotion. Sometimes you just want to wait for the cool down a little bit. And when you buy right here, if you got the bottom, you're saving another 2%. Is that really worth all the stress? No. I like to just kind of wait a little bit longer, buy right here, wait like 9 hours, I get 7% back, or however long I've been waiting now, if even more than that. So use a little bit of knowledge, share it with your friends if you want to. It's a great way to make some money in the markets here if you guys like to long during these kind of emotional times, which right now is definitely emotional here. But things are looking good, guys. Things are looking really, really good, and I'm excited about that. We talked about this last night. What if Jerome Powell said something more dovish? Well, he said something more dovish, and now we're having a nice bounce. Bitcoin overall is still bearish. I want to stress that. Still very bearish, but we have a little bit of party time before we take our next dip, and we should all relish in that. And this would be a great opportunity for you guys to have a bunch of day trading opportunities here. I have the link down for BitGate or KuCoin if you want to try day trading with them. But BitGate has paper trading, so if you guys want to learn how to short and make money on the way down, which is like with ApeCoin, that was great for me. I shorted it on the way down. You guys can learn to do that without risking your own money, which I think is pretty crucial in these times, because if you're me, kind of going over to like the broad viewpoint of this channel here, go over here to Bitcoin. We know we're in this bearish flag, right? And right there, this is a continuation bearish variance flag. If you want to be very specific, flag bearish with Bitcoin. We're just kind of trying to find out when exactly we're breaking down. I've talked with a few of you guys today over the week, kind of expecting another shoulder to pop up, like something like a hook like that, not up as high, but something like that, where the next time we come down, we end up breaking down from here. Okay, but we'll bring this down from here. The main thing we're waiting for at this moment in time is we're waiting for that next level of capitulation. So a lot of us are frankly just saving money at this point. Saving some paychecks, saving some, savings, whatever. We're just saving money, putting it into like, USDD, high interest accounts, and just kind of letting it sit there, making money for us while we're waiting for the next level of capitulation, which in this circumstance, let me get this out of here for now. Waiting for that long red candle, sell off, sell off, sell off, sell off, capitulation, 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 right? And we're waiting to also break down below the 100 weekly moving average, which is usually a really bad time. It makes the sell off so much worse, right? You see capitulation here to here, not nearly as bad as here or here, off of like the high to low, high to low. Not nearly as bad because we didn't have the death cross, and we also didn't break down below the 20-month moving average here. That's really the big thing we're watching. And what is this? The daily chart here. I mean, we got the 200 weekly moving average here. No. This is daily, so this is the weekly one. 200 weekly. Okay, yeah. Normally, when you guys want to buy, it's usually buying off of this 200 weekly, and that's what we're kind of hoping for. But again, nobody's going to have a magic crystal ball or anything telling you guys when exactly we're going to crash. So for now, we're having a nice bounce. I'm enjoying a nice bounce. We bought at support yesterday in anticipation of a potential bounce with a tight stop loss there because it was support, obviously. And we're seeing some of the fruits of those returns at this moment in time. Heck, even Ethereum is up like 7% right now. That's a beautiful thing to watch. And you can see stocks are at session highs right now. The Dow is up like 900 points. Everybody's really happy. He's not going to be tackling inflation as aggressively as we might have thought he would. So for inflation, maybe that's a little bit worrisome to some of you guys, especially on the poorer side. But I guess he's trying to he's balancing day-to-day inflation versus the chances of a recession. He's trying to find the good thing in that. But that's what we talked about earlier, the lesser of two evils. He has to choose an evil because they're so behind the curve here on trying to fix inflation. Because for like the last year, they were saying it was transitory. Well, some people were agreeing with him, but there were some small people on the sidelines saying, screaming, it's not transitory, it's not transitory, it's not transitory. Right. But the gist here is, we're still bearish. We need to find... There's going to be plenty of buying opportunities as we break down below the 100-week moving average. But a good rule of thumb here, guys, is after we have the death crosses, after we have the breaking down with the 20-month moving average, if you guys just buy a little bit every single day while we're below this, it usually ends up being really good once we break back above it. Same right here. There was no death cross here. There's no breaking down below the 20-month moving average. And there was no capitulation telling you guys to buy in the first place. But you can see here, buying every day here leads to good returns, especially next time. At capitulation here, you buy every day after capitulation, even though we weren't down below this point right here. You would have still made some good returns, but there wasn't as many signals for this move down. The only real signal that we had was lower volume approaching, lower volume, and then the fact that we had a death cross here on the chart. Not a weekly death cross, just a daily death cross over here, April, and then just like a couple weeks later in May, mid-May, we ended up having the start of the big downward move for Bitcoin, which kind of freaked everybody out. Everybody was freaked out about that one. Because altcoins, Dogecoin, everything got hit pretty hard here. There you go. But here we go. Look at it. We're still barely holding, guys. 15-minute chart. We are still barely holding. You're going to see a little bit of a battle going on right now. I think it's just because you're seeing a lot of altcoins hit their levels of resistance. And, we're kind of just waiting to see if we can have that next level punch after this nice little move here. Look at that volume increase. Actually, let me see if there's any moving averages here actually blocking Bitcoin. That'd actually be a nice little thing to see. 30, 45, 1, 2. Oh, it's 3. There we go. That's it. The 200 on 3-hour chart, that's our level of resistance right now. We can easily break above it, but the main goal here, I want to stress that the main goal for Bitcoin at this moment in time is to close above this trend line in the next few hours here once the candles reset, right? So once you get the new daily candle, and that's in about 4 hours and 20 minutes. All right, so we got time here. Go to the 4-hour chart as well. Nothing really there. And on the daily, we have actually just broken above the 20. We also want to close above this as well. I want us to close above the 20-day moving average more than just closing above this level of resistance here on the trend line. The reason being is if we hold above this becomes a level of support. And then, it's a lot easier just to hold this level. And then from there, maybe we can even go down a little bit starting off the day, then have a really big day following, like, maybe the early morning of tomorrow, if you will. So we might have a little bit of a slow time ahead, but afterwards, then we start to see another move up where Bitcoin goes from like $40,000 or $39,800 all the way up here to $41,500 or $42,000. And then that's where I'm most likely, if I'm going to hold my 10x leverage positions, that's most likely when I'm going to start to look to sell them. Specifically like the FTM longs I bought and the Crow coin longs I bought. Those ones are extremely oversold. They need to pop up a little bit more in my opinion. And so that's what I'm really trading off of this moment in time, okay? And hey, Justin, ADA is at resistance. Telling Haram, yeah, there's a lot of stuff off of resistance. And hey, Almer, 420 at 420 has been was pretty eventful day, but definitely a while away now. What's right here? What do I think of ADA? ADA is fine, but it's at resistance. Yeah. So if you want to buy ADA right now, you're going to be hoping that it's actually going to be breaking out above its level of resistance here. So if we go over to which watch list I want to use, we can just go to this one. So it's up 12% already. That's a pretty big thing to go after. It's also at resistance at the 20-day moving average and at this old trend line that we used a while ago. And a lot of times after we break down, we come back up and we get shorted back down. So you want to be careful with this one. If you were to buy at support a while ago, I don't know what this one was. Is this a Fibonacci line or something? Or yeah, this is a Fibonacci line. So we tapped off of the Fibonacci line here. You can see it actually worked here. It did a little bit of job work for us here. If you would have bought there, now you would be starting to scale out. Just now starting to scale out. So be careful with it. It had a nice little boom, but people that bought down here off of the Fibonacci levels, that were pretty accurate here actually as well, and here, you're going to see them slowly start to scale out, and you may see some buyers into the market to try to push it up above the 20, but you're going to be banking on Bitcoin having that higher move, because if Bitcoin has that higher move, then we start looking at the next level of resistance somewhere up here about 97 cents for ADA, which could be a really nice move going forward for us. Before probably ultimately coming back down, to be frank, but there'll be an opportunity if you guys want to buy along with leverage or so, you can definitely go there. And that's why I keep on telling you guys I have the links down low for the exchanges. You guys want to have a modern exchange specifically so when you're trading these bigger moves, you don't have to put up a lot of capital on the line like you might on Robinhood or Webull or like a Voyage or something like that. If you sign up for BitGate or KuCoin or anything like that, you can trade with leverage, which means you could turn $100 into $1,000, $1,000 into $10,000, or even just $5,000 if you don't want to go too heavy on your leverage, right? Or you could turn $1,000 into $1,100 if you just want to have a little bit of money there. You can change it up however you guys want to, but having that ability to leverage your capital, once you guys have trained yourself on how to do it, it's really the big difference here between saving some capital on the side and overexposing yourself in the market just a little too much. So, like for my example, I put $1,000 into FTM along. And I did a 10x leverage, so that $1,000 means that I was able, with that $1,000 with the 10x leverage, I was able to buy $10,000 worth of FTM, of course, using leverage. And since the price of FTM is currently up 11.5% today, what that means is that instead of making just 11%, I multiply that by 10. And now I've been able to make, or 11, 10, yeah. Now I made 110% off of that one trade here, right? So that $1,000 now turned into $2,000 within 24 hours. And so since I made $1,000 today, well, guess what? I'm happy with selling that. I'm going to be a little bit greedy and hold on to it a little bit longer, to be frank, right? I told you guys that a few minutes ago. But when you put it into hindsight, let's say you just put down $100, and that $100 turned into $200. You made $100 in 24 hours, right? You made that money with minimal effort, without putting up a lot of capital to do so. And then as you grow and grow and grow, and you guys use that trading journal I gave you guys for free, and you guys start to see your patterns and what you're good at, what you're bad at, and you kind of focus on what you're good at, of course, then you guys can start to level it up. Well, I just made $100 in 24 hours with like maybe a half an hour's worth of work on it, right? But then once you start doing that more and more, and if you had multiple ones, because I had FTM, I had KuCoin, both those did really well. You can kind of do that side by side, and let's say you did 2 trades with that, like $200 worth of trades. You can say, well, I made about $200 in 24 hours, with not much work, and then you could, what's an easy way to say this? You could see, hey, I have this job where, like when I worked at in Montana, I made like $8 an hour. Well, $8 an hour, 9 to 5 job after taxes. I mean, really, what's 8 times 8? What, 64? I think it is. Geez, I'm not good at math. I haven't been good at math in a while. But like $64, okay? $64 for the day, or let me double check that. I feel like it's so low, but I haven't been paid low in a long time. Heck, I haven't been paid in a long time, haven't I? 8 times 8 is 64. Yeah, like 8 hours, $8 an hour, like $64. You made more than a whole day's worth of work. You made actually double that. So you once you start doing leverage, you can put everything into perspective without having to put up so much capital. Is my main point there. And hey, MD, what happened with our Doge? Doge hasn't done much. It's up, what, 3%, so it's moving up a little bit, but Doge hasn't been getting hit as hard as everything else, so it's kind of going more sideways overall. Dogecoin's still fine. Whenever we capitulate, it's going to get hit hard like everything else, right? But there'll be the opportunity during that capitulation to buy Dogecoin at crazy low prices that we might not see for a while longer. We probably won't see ever again, actually. But the same thing goes for a lot of these other coins here, right? That's the main thing. What happens if your leverage goes down? So you can, so with BitGet primarily, I recommend you guys sign up with BitGet and KuCoin, doesn't matter really. But with BitGet, you can change the leverage while you're trading, which is kind of nice. But you're normally not going to be changing the leverage during the trade. The problem with leverage, if you're not used to it, this is why I said you guys got to practice a little bit first, is if you over margin yourself, then the position will be liquidated. That's what happens a lot with whales, right? They buy up millions of dollars worth of crypto with leverage, and they're forced to sell to make sure that they don't owe the bank, they don't owe the exchange money. Right, that's the only big thing, but the leverage is going to stay there pretty much at a constant level during the entire trade, unless you specifically go out of your way to change it, which most people don't do it. Let's see. And hey, Justin, what price we don't want the end of the day at? Oh, we just want to stay above the 20-day moving average as far as Bitcoin's concerned. That 20-day moving average price is going to be pretty consistent. It's going to stay pretty much the same here. So if we look at this chart right here, the 20-day moving average here at this specific moment in time is 39,577. 576 is kind of teetering between those two levels right there. So 39,577. That's what we want to stay above. And right now we're currently at 39,727. So nothing too bad here, okay, guys? But that's it. I'm going to end the stream here. I need to actually make some breakfast/lunch. I haven't actually had food today. All I've been drinking down is like a bunch of tea. I was watching the Amber Heard trial. She's still on the stand right now, if you guys can see her. That was my morning trading. Amber Heard, Johnny Depp, Team Johnny for the win here. So I'm just kind of chilling out and having more of a relaxing day. And I wanted to talk to you guys about Jerome Powell and stuff. So, that's it for the day, guys. I'll let you guys know if I stream later on tonight. If I do, it'll only probably be for like an hour or so, just to kind of recap everything we've seen. And if there's any good positions or any good breakouts to kind of recap, hey, we've had a good move and so forth here. But I want to make sure that I have the opportunity to probably scale out of my FTM position and scale out a little bit of my Crow, and then leaving maybe the last 50% to kind of ride on and see what happens with them. And I'll be happy with that being a little bit greedy there. But I want to take some profit off the table, and I want to do that right. right now as well, before any dips that may come in later on in the day, okay? So I'll see you a little bit later tonight, probably around 6 o'clock or 7 o'clock, and then we can kind of do a little bit of a recap, but you guys should be fine going forward. And Justin, so if I short Bitcoin 5x and my position gets liquidated, I owe the exchange? No, it'll protect you by selling it before that happens. It'll protect you because they don't want you to owe them money, but that means the position will be lost in its entirety. So instead of taking 10% of your money back, they'll take the entire thing because that's what they would have been owed. But there's a safety net there on BitGet and KuCoin to make sure that you don't owe them. So you will never owe them anything. But that's why you're going to be using $100, $200 with leverage or 10x leverage. You really only get a problem, Justin, if you're trading with like 125x leverage, 200x leverage, 50x leverage, where things can get very, very volatile. For like every percent that Bitcoin goes up, you make 100%, or every percent Bitcoin goes down, you lose 100%. So you're not going to really see too many of those problems there unless you put so much money in there and you have such a high leverage. But if you're normal and you're not going crazy, you're going to have a leverage of anywhere from 1% to 10%. But for now, you're most likely going to do 1% to 5x, or 1x leverage to 5x leverage, okay? Thanks, everybody, and have a great, great rest of your day. I'm making some stir-fried